Hello, sir. It's a pleasure having you at the event today and a very, very good opportunity for us to speak to you. So, I'm going to ask you a couple of questions on what do you make of this bull run right now? What are the sectors that you're looking at very closely? And where do you think is it the right time to invest, or what are the sectors that you're paying special attention to?
You see, the thing to realize at this point in time is a lot of it is inestimable. So if you look at the new sectors, whether it's renewable energy and so on, so a lot of the capex and the ancillary benefits will not be estimable. So the valuations will look high because it's inestimable. If you look at the other side, which is the productivity benefits, the efficiency benefits out of, let's say, the digitalization which has happened and so on, again a lot of it is inestimable. So you're going to think that the valuations are high compared to history, but a lot of things are yet to unfold. So that's the main thing to keep in mind when you look at for the next 5 years. So if you look at sectors which are in demand, like capex, defense, stuff like that, on the one hand, and the other hand, the sectors which are on the not doing so well, like IT. In both, you will see that the valuations don't capture the what can happen. Uh, uh, you have over exuberance in sectors within capital goods and defense for sure. Okay, so you have to choose those stocks more carefully. On the other hand, in IT, what is inestimable is when AI comes in. You are talking only about the loss of jobs at the lower end of coding. But what about the huge amount of jobs that can be created by the training of AI in terms of classifying data for that? So that's something which people are not considering. And we've had, every 5 to 10 years, you've had major waves within IT, which India has capitalized on. So this would be the next one. So I think on both the over exuberant sectors and the ones which are valuations are low, you have multiple opportunities. You have to now look at stock specific rather than sectors as a whole. So it's more of a barbell approach.
So, sir, I'm going to ask you a question on the IT sector. I mean, the expectation is tepid for the entire year. So, you believe this is the right time to enter the space?
See, you can never time it. You can never sort of catch a falling knife. So it's very difficult to say that, boss, at what time will the US atmosphere change, the recession, interest rates, and all that. It's just that right now the larger players are actually not as valued compared to history, and don't show a huge upside because the next 1 year looks weak. When that will change, when the tech has already started rising in the US in terms of the stocks and so on. So when that will permeate, it is unestimable. But the smaller companies, the mid cap companies, they are having a much higher growth rate than some of the large caps. And I can't talk stock specific to non-clients, but some of the mid caps are good. Also, there are platform companies which are not related to IT services, which one can look at, which is not related to this US thing. I think those sort of companies, the platform companies within the IT sector, I don't think people are paying enough attention to.
And so, on the whole, as markets, as you look at it, would you place your bets on the large cap, mid cap, or the small cap? What do you think will rally now going forward with so much of expectation around foreign investments coming in and the whole rally that we're seeing right now?
See, there are two situations under which mid caps do better than large caps. One, when the discount in forward valuations becomes huge, which is not the case now. The second situation is where there's a surprise in the GDP, which is also not the case right now. Because what happens in surprise in GDP is the smaller companies, their margins increase and their sales increase disproportionately. Both are not the case now. So I think I would look at larger companies now rather than small and mid cap, with the exception that there are a large number of new sectors which are not well represented by the large caps, which are very stock specific.
At least if you could give some color on those sectors, then.
Among the smaller ones, oh, there's so many of them. You have to look at, I mean, they're across the line. They're defense, textiles, etc., etc. There are too many. Ethanol, I mean, there are a whole range of sectors which are not covered in the large caps. And you can have specific, stocks within those.
And so, what are the risks that you envisage? I mean, the markets are just following the bull run, but what is the sort of risk that you see could lead them to, correct a little bit or create issues in terms of investing?
See, the biggest, so first risk is what happens in China. So they did a self goal. We all know all the self goals that they did last year. But all those self goals are policy related. China can reverse its policies. And you say yesterday's news on their, now the government talking to the tech guys better. That was yesterday's news. So whether it's tech, whether other things, there are fundamental problems in the property markets. All that is known about China. But they could reverse the self goal. If they do, the entire flows that is supposed to come to India, which were related to China, that could abate. So that's risk number one. Risk number two is we are geopolitically correct as of right now. US, Europe, etc. tolerate us. They gave Shabasi to Modi and everybody else and so on. But we are not towing their line. In a globe which is going to become multipolar, how we survive is a question mark because of two reasons. We are the only major country in the world which is so import intensive strategically. Energy, defense, electronics. All three. All three, we are strategically, and we have two new armed neighbors who have fought with us. So in the multipolar world, who throttles you when the times are bad? And if our leadership, the political leadership, if it changes or even if it doesn't change, if it weakens in some way, and we are not able to face up to a multipolar world, you don't know. The third is whatever we are doing in terms of infra and capex and manufacturing, what if we are outcompeted? So in manufacturing, suppose in manufacturing, there's a huge amount of automation and robotics and all that happen in the next 10 years, which then make us uncompetitive. Similarly for infra, while it's becoming K-shaped. So there is consumption and infra which is happening at the higher end. But how much is happening at the lower end? So if you look at the US, for example, post World War II, there was some 30 years of everybody rising at a similar pace, the richest and the poorest. Then came from the 70s, late 70s till now, where it became K-shaped. The rich got richer and the poor got poorer. And then you had a lot of social problems that you are all aware about in US. Can the same thing happen to India? North is, just getting poorer and poorer, while the south of India is getting richer and richer. So can they be this whole working age population? Can it become a social unrest and so on? Because we are not being competitive enough to retain jobs and to make more jobs because of what is happening in the world. I think these are the biggest risks.
Thank you so much, sir. It's a pleasure having you.